Hi guys, I'm Michael here. In today's video, I will not be discussing another trading strategy, rather a trading method of technical analysis. It will be a different way you can approach the traditional technical analysis of the charts. To do that, we will be using currency indexes. And if you are wondering what is a currency index, well, it is a measurement of a particular currency strength against a basket of other currencies. So for example, in the basket of the US dollar index is, for example, Euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and Swiss crown. And for example, in the currency basket of the euro index is, for example, the same situation. Instead of euro, you have US dollar, and instead of Swiss crown, you have Australian dollar. And where you can find it, just Google the euro index currency basket or US dollar index currency basket, and the definition will pop up at the top of the list. Then you can check from which currencies other indexes are based off, and those indexes you have available also for free in the LiteFinance MT4 platform. So we have over here the US dollar index, euro index, and pound index, and today we will be discussing those charts and how you can conduct analysis based on that, because it is also an interesting concept that can forecast you the future price movement. And another thing I want to add is that I will be mention it a lot in the videos. So yeah, don't be bored by that, but it is a very important thing when trading currency pairs. You need to understand that currency pairs are not arising assets like stocks, for example. You need to understand that there is no such concept as good or bad currency strength. There is no such equilibrium point where there is a perfect balance between the strength and the weakness of a currency. You need to look at them more as a commodity, as a means of payment, not rather as a rising asset that, for example, if some particular currency is weak or strong, is cheap or expensive compared to other currencies, it means that, for example, this economy of this country is, for example, doing well or not well. So it has nothing to do with that. If you compare the stock markets, how the economies are working, it has nothing to do with the, for example, strength of the particular economy. So that is one misconception that we had to explain. So let's go to the charts and let's talk about this method. So let's start with the US dollar indexes. So for example, how you can approach the analysis of this charts. So you can apply all of the available for you trading methods. So I will talk about, for example, in here, a method that I was also briefly discussing also on Instagram, on TikTok. So if you don't follow LiteFinance over there, be sure to do that. And this is fairly easy to spot chart formation. It is a broadening formation where you have the formation looks like this. When you draw the trend line along the highs and along the lows, it will show you some kind of a megaphone, something like this kind of a formation, broadening wedge, whatever you want to call it. So the concept of this formation is that you are trading fifth wave. So what I have on me, I want to show you that here we have the first wave, here we have the second, here we have the third, here we have the fourth wave, and right here, this is the signal for us that we can enter over here on the long side of the market. So basically, we need to check in which currency we want to trade, and therefore look for the inverse or direct correlation. It will depend on the particular currency pair. So if you have, for example, currency pair like USD Swiss franc, it will mean that the USD is in basic words, is the first currency in this currency pair. Therefore, this currency will be directly correlated to the dollar index, and so it means that if in the dollar index is showing you weaker move, downtrend, this currency pair should be also showing a weaker price, lower levels. If the dollar index will be rising, the currency pair, the quotation of this currency pair of the USD Swiss franc will also rise. It is the opposite if you have the GBP, USD and Euro USD, AUD USD, and so on and so forth, because the US dollar is the second currency in this order. Therefore, it will mean the opposite move. So you can also check videos on that on this channel. What is a quoted and base currency? So you will know what I am talking about. These are the most basic concepts. So you can just check other materials. So we stopped at the fifth wave. So here would be our entry level. Let's mark that. And maybe let's zoom in the chart. Okay. So we have it over here. Here is our, maybe be a bit more precise. Here is our entry level. Again, so we are looking for the best currency to trade with US dollar. So we have available the most popular one, Euro USD and Pound USD. So now, because this is something that happened previously in history, so we need to check the dates. So right here we would enter and it would be, or over here, so it is 3rd of September. So let's go for the Euro index. So the 3rd of September is over here, so let's mark that. This day. Okay. So let's zoom out the chart and what we see. So we can see that the euro is in clear downtrend. We have here this high. We can see all-time high. Here is the lower high, lower high, lower high. And still from here we have the clear downward move. So this is the situation on the euro index. Let's go for the pound index. And let's see where we have the 3rd of September. So it is on, it is in here. Okay, so let's mark that rectangle. Let's zoom in, guys. Oh, okay, I lost that. So now you can see it better. It is the 3rd of September. Okay, so when we have marked the starting date, now we know where we are. Let's zoom out the chart. And you can see that, for example, after Brexit, the pound is still consolidating in this zone over here. Right? You know what I'm talking about. Okay. So these are the upper levels. So we can say right now, if we compare to the history, the pound is relatively more expensive compared to other currencies than the euro. They most likely are moving in the same direction, but we are trying to choose on which asset should we trade. So even if we see this chart, we can clearly see that we are somewhere slightly below the resistance level. And we can't see, or maybe let's, okay. So right now we can see that more or less it looks like more of an uptrend than a downtrend, right? So based on that simple analysis, we can more or less digest which currency should be potentially weaker than the US dollar, right? So if you have in comparison relatively strong pound in a more or less clear upward movement, clear uptrend, and you have relatively weak euro in clear downward movement, in clear downtrend, when we saw those lower highs and so on. So which currency pair would you choose? Logically, it would be euro, right? We need to tell that market is not logical, but hey, we need to stick to some rules if we are trading, right? So that would be our decision, for example. And so yeah, let's go for the euro USD currency pair and pound USD currency pair and see what happened. So we have the euro USD daily chart, and let's check the it's August, and right here we have September. So this candle, maybe let's zoom in. Okay, so this candle is the 3rd of September. So let's mark our entry. And let's see how far did we go, how long it took to fulfill this pattern. So we have the 3rd. So over here we have 19 candles. So you can see with this measurement tool with the ruler, it is 19 candles. So let's go back to the euro USD currency pair and let's measure 19 candles. So from that, it is 2021, 2019 over here. So this was our exit level. Let's mark that with a different color, for example, red. And let's check how much we could potentially earn on this move. It was almost 300 pips, 200, yeah, or more or less 300 pips. So let's check, for example, pound USD. So again, let's zoom in. Let's look for 3rd of September, and it is over here. So let's mark that. Make it green. Right, and look for the 20 candles period. So we have third of September and 20 candles, 19 candles are over here. So we can clearly see that this would be more profitable. This is 413 pips more or less. So we have 100 pips more. Let's mark that. And you are most likely thinking, oh, okay, so Michael, what is the logic? If the trade on a pound USD turned out to be more profitable than the one on the euro USD. Well, the thing is that you see there was more volatility. The move was stronger. But if you are trading according to the rules, you will most likely trade with a risk reward 2-to-1 or 3-to-1, right? So based on that, you will be risking your, for example, 1% per trade. So you will be in profit either way, the same amount. That's the first thing. And the second thing is that, look at this example. When you trade, where would you place a stop loss? Most likely over here, right? Maybe let's, I can zoom in more. So I will just need to make this line thicker. Even more. Okay, I guess it is visible. So more likely you will be placing your stop loss above this wick, right? This is your entry level, and a logical level of a stop loss is over here, pips or two depending on your broker's commission and a spread. So you are adding to the highest point to your stop loss. So look what happened here. Your stop would be triggered in this particular example, right? If we go to the Euro USD, you see that no such thing happened over here. So if we place our stop loss above the wick of this candle where we entered over here, we would be simply in profit. So that is basically more or less how you can potentially use the currency indexes. And yeah, you can think that there are another charts that you need to look for, but hey, this is, as I said, not a holy grail, but a different perspective of the technical analysis and a way to broaden your perspective, to look at the charts from a different way, to look at them more broadly, to have a comparison in one chart how this currency performs against other five. I saw also that there are videos that somebody is teaching people how to trade with the currency indexes, going full margin on breakouts and stuff like that. Guys, as you saw, there is so much volatility on the market, and it is hard to predict such scenarios in as they are claiming 98% of win rate. So it's not gonna happen. If you will try it once, two, three times, you will lose your old deposit. You will know that there is no difference. There is no difference to that compared to any gamble game. So yeah, I hope it was something interesting, and yeah, let me know in the comments what you think of it. So see you in the next video. Take care. Bye.